Hi, this is Joe Doman with Remax Gateway here in Brambleton. I'm Brambleton Spotlight Realtor of the Month. This month I'm here with Pat Cunningham from Home Savings and Trust Mortgage.
Thanks, Joe. Hi, I'm Pat Cunningham. I own part of a local mortgage banking company called Home Savings and Trust Mortgage. We do a lot of lending here locally in Brambleton, and excited to answer some questions and hopefully enlighten you on some things that are changing in the lending environment that may help you out.
So can you tell people what are the most common types of loans people are getting today?
Sure. The lending in general has been back expanding again, but still the most common is going to be conventional, right. FHA, which stands for Federal Housing Administration, and VA, which is Veterans Affairs. That's for people who have earned entitlement to use VA loan products. So those are still by far most of the market. Now, then you also have some first-time home buyer stuff like VHDA, which is a Virginia Housing Development Authority.
Right.
There's
just closed one of those.
Yeah, they're common. They're just not as common as your FHA, VA, and conventional. So that's kind of the stock, and then the lending community will build on some other products for first-time home buyers and some other niche products.
And what do you guys do? You obviously go through all the different types of loan programs that somebody might be able to qualify for, and then determine which the best program that would suit their needs would be.
Yeah, I think a lot of it has to do with goals of the home buyer or the client, seeing what they qualify for, but also asking them kind of what their goals are, how that relates to the payment, down payment, cash they have available, things like that. And then even sometimes integrating what they want to do into a kind of bigger picture financial plan to make sure that they have, sustainable home ownership is a big deal.
Right.
And making sure they're comfortable with the payment and they're doing the right thing with their down payment or lack thereof, to make sure that they're planning well for retirement and able to continue to be a big part of the community going forward.
And I remember we spoke earlier about down payments, and a lot of, the lending has changed quite a bit over the past 12 to 18 months, and it's getting a little bit easier. Do people have to expect 20% down now? I think a lot of people expect to have to put 20% down for a conventional, and that's not necessarily the case.
No, not at all. And I'm being immersed in the lending world. I'm always surprised at how many people think that you need to put down such a large down payment.
Right.
We don't discourage it at all, but really the loan programs are anywhere. There's a lot of no money down loan programs.
Right.
I think you'll see more 3.5%, 5% down, but it's far from 20% down. There's a lot of options to finance. There's a lot of financing options without 20% down.
And then what do you typically tell people? I normally will tell people that, I try and set the appropriate expectation throughout the entire buying process or listing process as well. But I always tell people they should kind of count on 3% in addition to their down payment toward their closing costs.
Yeah, I mean, when we talk about cash needed to the buyers, I think when you're in the 300, 400 price range, 3% is a very good figure. When you start getting higher, in Loudoun County here, we have $400,000, $500,000, $600,000, $800,000 price ranges, quite consistently. You can shave off a little. I think 2.5% when you're in that $500,000 range is pretty accurate. And that also, that's cost to buy the real estate and get the loan, but about a third of that number is setting up an escrow account for your taxes and insurance.
Right.
So it's not all necessarily a fee, but it's certainly cash that's needed
Right.
in addition to down payment, or that you need to work with your real estate pro on possibly negotiating to have some of that covered. People don't realize that, yes, if you're doing a down payment, it's either going to come from you or a gift from your family, but that closing cost, most of the loan programs will allow for that to be coming from the seller potentially.
Right, and that's how you help us plan our strategy too, on how we're going to put in an offer on the home. Are we going to ask for closing costs? What's our strategy based on what they're able to do or how much money they are able to come out of pocket with at the end of the day.
Yeah, when people are moving into the neighborhood or moving up, we don't just say, okay, here's your payment, here's how much cash you need to buy the house and closing costs. They need to know that stuff, but they also need to know, we need to ask them, what's important with your cash? Are you better off just keeping some of it in the bank, doing a little bit less down?
Right.
And that's something that gets integrated with the conversation with the realtor, so the realtor can help them plan and negotiate accordingly.
We always suggest that they keep, some reserves in there too, not have to come out of pocket with everything. So we try and get them you know, to come out of pocket with as little as possible, or as little as they're comfortable with.
Yeah, it's kind of like they got to find a happy medium. A lot of times people will want to, either selling a house and moving up, they'll want to roll over all that equity, and that's not necessarily a bad thing, but I guess it would be a bad thing if it was in lieu of they had other consumer debt or they weren't fully funding their retirement like they should be. For very...
Like me.
you can put yourself in a worse financial position by sometimes putting too much money in and leaving yourself in a bad shape where you get a flat tire, all of a sudden you don't have any money.
Right.
So
what I have another one that's kind of twofold, and I'll kind of tell you what I usually suggest, and maybe you can give us a better ideas. I typically tell people when they're wondering, and now with technology and apps and all that stuff, it's relatively easier to calculate your payment or get a good idea of what your payment may be. I usually tell people a good guesstimate is $6 per thousand is typically what I tell them, just to give them some sort of range of what to expect in a payment. And then the second part is how do they know how much they're going to be able to do, or how much they're comfortable with, or what are those kind of guidelines that you guys go by?
Yeah, I think $6 per thousand is pretty good.
Right.
I do think there's a lot of confusion with buyers around what the real payment is. And when they look online or they look at an advertisement and they see this house is this, and here's the payment associated with it. Yeah, a lot of times that doesn't include property taxes, mortgage insurance, things like that. That has to be accounted for. So, so they can budget accordingly. It's best to talk to, you or I up front, and we can give them a real realistic expectation so that they can shop confidently or make a planning decision with their family whether it's the right time to move up or not. What someone qualifies for and what they're comfortable with is often two different things. If you have great credit and hardly any debt, you'd be probably surprised at how much the lender can lend you relative to your income. If you're on the other end of the spectrum, credit's weak and you have a lot of debt, sometimes it's less than what you're hoping, but there needs to be a matching of your comfort level as a buyer in a monthly payment, and somehow find a harmony with what the bank can do as well. Right.
And then what are kind of your predictions over the next 6 months? So we kind of, I feel like in real estate piece of it, we've been kind of just floating along. We had huge price increases last year. Days on market last year was 17 days. It's gone up in Loudoun County to upwards of 4 months now. Not necessarily in Brambleton. Brambleton is about 2.2 months in that ballpark. Prices haven't really been impacted much by it, but they're not on that steady incline. They're just kind of flat riding along. And I know that the Fed just had an opportunity to raise the rates and they didn't, which is great news for everybody. What's going to happen over the next 6, 12 months in the lending side of everything?
Well, I think the buyers this fall and winter have been kind of given a gift. Rates were kind of rising a little bit this summer, and we were expecting the Fed to raise rates, which doesn't always have a next day impact on mortgage rates, but it certainly can set a trend. And that's been reversed. So rates are surprisingly low. Right now they're the lowest they've been all year, and getting close to where they were even a couple of years ago. So the affordable, the 30-year fix are under 4. Some of the FHA and VA loans are in the mid 3s. It's just not at a level we expected. So the buyers right now, I was just telling someone this morning, they've gotten kind of lucky in their search right now with their timing. So prediction-wise, I don't think it's going to shoot up during the winter, but as we get into next spring, if the economy continues to show decent signs of improvement, you're going to naturally see rates come up, and the Fed is talking about moving that rate increase now to 2016. So I think if you're looking to move up now or you're moving into the area, it's a good time to grab that money while it's cheap, and while the home prices are not shooting up right now, because we may start to see the home prices bounce back up.
Right, and then, that's the other thing too. I've talked to people who kind of have two different views on it, and I feel like, the way that I typically explain to people is interest rates 1% increase is equivalent to a 10% sales increase on the house. So it's a $500,000 house, interest rates go at one point. Now it's like buying a $550,000 house, and sometimes people are really on the fence there, and it could totally knock them out of that market or that price range. But also what I've seen too in the past is when interest rates start guiding up like that, it puts some downward pressure on pricing as well.
Yeah.
Because it's changing that affordability.
Yeah, you're right. I think people that are moving into this neighborhood or moving up within the neighborhood that are planning on being here a while, it's amazing if you look at your cost of borrowing and how much that impacts the life, the life of what you pay.
Right.
If you can grab the money now and you know you're going to be there for a long time, it's a huge difference compared to if you grab that money at 5% or 6%,
right.
A year or two from now, what you pay over the life of the loan. I mean, I think a lot of the people in this general area are planning on being here a while. So
right.
if they can get that house now with the cost being where it is, that's a huge win when you look in a 10, 15, 20-year period.
Right. Brambleton's very sticky in here. You get a lot of people that are moving up and down. They're staying within the community, but they're upsizing and then downsizing at the same time.
Yeah. I mean, hopefully, it's not a good idea to buy a house that you're going to have for a year or two. I mean, because who knows what's going to happen with the market and your job and stuff like that. You may be relocated, but if you're planning on being there a while, which is what most people are doing in Brambleton, because they just want to be here, it's a good time.
And it's a lot more cost effective than renting too right now.
Oh my gosh.
Rental prices are going way up.
Yeah.
And you're not getting the tax benefit, which a lot of people I don't think realize. So yeah, we're trying to convey that message to people that are renting. Hey, if you're going to be here for 2, 5, 6, 7 years, you may want to consider buying it instead. It's going to be much more cost effective for you.
Oh, for sure. And with the ability to put down less money now and get the home. Whereas even a year or two ago, it was some of these down payments were double what they need to be now. So it's wide open now, or opening wide open, and this is a much better position for buyers or situation for buyers.
Awesome, thanks, man. It was great sitting down with you. Thanks for all the useful information, and thanks to Brambleton for letting us be a part of it.
Yeah, thanks, Joe.